Hello and welcome back to Coinscrum Markets. I'm thrilled to be joined today by Kendrick Nguyen, CEO at Republic. Hi, Kendrick.
Hi, Paul. Thank you so much for having me.
You're welcome. And also welcoming Banafsheh Fathieh, Head of Investments at Prosus Ventures. Hey, B.
Hi, Paul. How are you?
I'm good, thank you. Thank you for joining us. So, as we were just saying before, maybe a little bit off topic with all the kind of frenzy and headlines around NFTs in recent weeks and 6 months of DeFi before that. But if we look back a few years, one of the hot topics from like 2017 onwards was around security tokens and how that was going to potentially become a new asset class and open up investments more broadly to a wider audience. I think there has been a lot of work done in that space over the last few years, but I think there was lots of regulatory hurdles for companies to overcome to get up and running. But we're seeing quite a few of those platforms come to market now. And Republic, which is one of Prosus's portfolio companies, you've been around since, I guess, before the whole tokenization topic really came to the fore, Kendrick. But I know it's something that you've been paying close attention to, and you've taken quite a measured approach to how you've decided to enter the market. But before we start, should we just get a little background on each of you? B, tell us a little bit about yourself.
Sure, happy to give you a bit of introduction on myself, because I won't bore you with my career details. But what I can say is that I sort of ping-ponged a lot from sort of investor to operator throughout my decade or so in venture. So I started off as a fairly traditional path of investment banking and private equity. Then decided to go startup side. Joined an early stage company, kind of got to see firsthand what Ken is going through now, which is, I guess, catering to and raising lots of capital from Silicon Valley, as well as scaling a business that's in hyper growth mode. So again, got to enjoy that for a 3-year journey. And then joined Prosus about 4 years ago in the capacity of heading our early stage investments here in the Americas. But also a lot of our frontier technology investments. So that includes things like blockchain, synthetic biology, anything with really kind of a deep science bent tends to be a passion of mine. So that tends to be my coverage area.
Cool, thank you. And Ken, tell us a little bit about yourself, your life before Republic, and when you started the company.
Thank you, Paul. And similar to B, I had a prior career in traditional finance and was a securities lawyer before going back to academia, also in law, and joining AngelList, the accredited only crowdfunding platform back in 2013, 2014. And through that experience, worked pretty closely with Washington, D.C. To change this little law that prohibited non-millionaires to invest privately for 80 years since the Great Depression in the 1930s, all the way to 2016. So in 2016, it was a tiny piece, 4 lines of regulation that really changed, in my opinion, the next century of the capital market. And it really opened up the door for retail capital into the private markets. Well, that's the promise anyway. I think anything that's worthwhile takes a little bit of time to mature, and anything that's worthwhile and heavily regulated naturally take a little bit longer. But when we started out at Republic, the focus was just to enable everyday folks to invest first in private companies, in startup, in small businesses. And I also was a co-founder and the interim CEO for Coinscrum, which is another company within the AngelList ecosystem. And that was 2017. And around that time, that was when we ended up combining the potential of distributed ledger technology into the world that we very much believe will thrive and will mature, which is private investing for the retail public. But that's how it got us to where we are today, is the one-stop shop investment platform for all things private investing, accessible to everyone, everywhere, of all income and net worth spectrum. But we'll dive into that in a bit.
Yeah, no, absolutely. And I guess the US was slightly late to that party to a degree, because I think in Europe, some of those crowdfunding platforms had opened up a bit earlier. And I guess this is part of the discussion around security tokens in general. It's like, tech moves at light speed and regulators move at glacial speed. And it's how we marry the two together. And I think a lot of people are finding that out. And I'm sure you'll have a few stories to provide some lessons to our audience around that. But just purely on the idea of security tokens, in principle, it's great. We've got this very outdated market infrastructure for trading and clearing and settling equities. It can take days to settle your equities. And now we have blockchain. It's like, well, why can't we do this in kind of minutes or seconds even in certain cases? But as I mentioned earlier, I guess companies that have kind of dived in to explore this space have found it's not that easy, and basically around regulations have been the big hurdle. So I guess from both of you, maybe Ken, start with you, just because you've been at the coalface on this. From your perspective, what is the real opportunity? What is most exciting about being able to tokenize securities, use DLT, blockchain technology? But what are the real? Is there anything else apart from? Is it just simply regulation, or is there anything else that people should be thinking about in terms of how and when this can really come to fruition?
Of the myriad use cases for blockchain, there are two attributes that I think it will fundamentally change the world of investing as we know of it. Fractionalization, the ability to fractionalize, break anything, art, NFT, a share of a company into 1 million pieces or 1,000 pieces, and the ability to automate things like payment settlement, KYC, AML accreditation. When you combine those two things to make it far easier for people to transact and far cheaper for people to transact, you're going to enable a lot more people to come into the ecosystem. And if you look at the global economy and how much of the world, typically outside of London and LA and New York, that people are still putting money under their mattresses and putting gold bars in like safes. And if you can unlock and enable that lower middle class, young professional or even a student in Malaysia and India and Vietnam, in Iran, to invest, I think it's going to usher in, a new world of prosperity and connectedness. And I think that's one of the reasons why Prosus and their vision as a global investment firm, which is very, very different than much of the venture ecosystem, is something that we find particularly compelling.
Okay, well, thanks, Ken. So B, from your perspective, you've invested in Republic, so you obviously buy into Ken's vision and see the opportunities for opening up, these markets to a more retail client base. And I guess we'll discuss it soon. Probably doesn't come without risk. We've seen a huge rush of all sorts of people coming into, whether it's trading on Robinhood, whether it's trading crypto. Everyone seems to be an investor these days. And I guess it will be part of the responsibility of these platforms to help educate that audience, because they are very new. And I do know as an ex-trader that, guaranteed you come in and your first few trades will be wins, and then things might turn around. So that's maybe an important one. We can touch on that later. But looking at this from the VC standpoint, do you see opportunities in terms of this technology, tokenizing securities? Do you see efficiencies for you as a firm going forward, or for your industry in general?
Absolutely. So I'll kind of start off saying that I actually don't envy the role of regulators here, because I think you're right that everyone is a trader and an investor in a bull market, right? And it's easy to start to have early wins, and as a consumer that maybe is not as financially sophisticated, to start to get more and more bullish when everything tends to be sort of trading up. So I think the role of regulators here with regards to consumer protection is going to be very important. So there's this very kind of interesting dance, right, between financial inclusion and consumer protection. And I think, historically what we've seen is that regulators have erred on the side of exclusion and have, as a result, kind of created a market dynamic where as more and more of the value of technology is accrued to equity investors, you're starting to see wealth disparity that I think is increasingly problematic. So for us, we kind of look at that and say, okay, maybe we need to look at the laws and we need to think about platforms that are compliantly looking to widen that base, that pyramid starts to get wider and wider, and you can give retail some more access than what we've historically seen. I think the good news with the SEC is that I think they've been actually fairly responsive, right? They've seen, and this is actually, I think, honestly, thanks to a lot of the work that Republic is doing, because I think it takes a lawyer to be able to kind of really kind of push the regulators and really make them see sort of how the world is trending. But I think they've really played ball. They see it too, right? But again, if you go back to the last 10 years, if you go back to the 2008 to today, a lot of the gains have accrued to equity, right? And it's something that if we are to I think have a functioning society that is inclusive, we need to kind of think about some of those laws and really try to push the barrier there. So I think that again, I go back to, I don't actually envy the job of the regulators because I think this is a very tough dance. But I think it is, if you look at Robinhood, they've done a fairly good job of this in the public markets. And if you go on Republic, they're replicating this same sort of ethos on the private side. You do need to educate retail on some of the ups and downs, some of the volatility, some of the different financial products that they're investing in. But it's, I think the old adage or the bias that somehow retail can't get it is not the right bias, right? It's one where, I think you, through technology, through education, can actually sort of bring them up the learning curve and really kind of give them the opportunity to really participate in some of the gains that are being generated on the equity side. So in terms of your question, I know that was a long-winded way of talking about two things that are entirely unrelated to what you asked.
No. I said we'd come back to it, but I wanted to touch on it anyway, so absolutely fine.
So I actually think it's interesting. On the institutional side, the wins are also obvious, right? So I think if you go and look at sort of the administrative costs of both on the public and even private side of being able to trade securities or being able to participate in any type of securities transaction, the costs are really exorbitant and really not sort of in line with some of the simplicity of even some of these transactions. I think that the automation that you see through blockchain, the ability, again, like Ken said, to leverage things like automated KYC, have wallets, these things they're obvious, right? So the cost savings are, for us, I think, easy to see. But I think the true revolution is around this sort of fractionalized ownership, retail participation, widening the base. And I think that's the part that definitely excites me very much.
Yeah. But as has come up already in this conversation, the regulators are there. And if I think back to like 2013, 2014, everyone was trying to position themselves and say, right, where's the best place to set up? Is it going to be in Europe? Is it going to be in the Far East? Japan was very proactive and getting kind of regulations kind of clarified quite early on. And everyone was looking at the US saying, oh, well, you've got to go and register in 50 states as an MSB. And then you've got the BIT license coming in New York and no one can trade in New York. And the concern was that people might be forced out of the US or have to look elsewhere. But that does seem to have changed quite a lot. We had Richard Johnson, CEO at Texture Capital, which is primary issuance platform that's being licensed out of New York. And I remember speaking to him, and when they started their SEC application, the SEC was, you can have a blockchain, but it's like got to have one node and you've got to run it. But by the time the application was completed, that kind of the position had changed quite considerably. And as we've seen more recently, with the authorization for banks to use public networks for clearing and settlement, it's changed quite drastically. So, Ken, from your position with the negotiations that you've obviously had over the last few years, what's your perspective on that? And do you think the US is actually kind of getting on the front foot now?
What we touched on earlier, I think is a lot. she corrected a misconception that a lot of people have in the space, that somehow regulators are here to be, against innovation and being overly restrictive. No, whether it's in the UK or the US, there's one role that the SEC or the equivalent of the SEC in Canada or the UK is making sure that investors are protected, adequately protected, but they do have a strong interest in promoting the capital markets. And when you look at something like equity crowdfunding outside of the blockchain space in the UK, it's been 10 years, not a single instance of fraud. And so when you look at the earlier phase of ICO in the US, non-compliant, non-regulated in any way, there's no doubt that there have been, more than just a few cases whereby investors felt like they were defrauded. But when you apply this regulatory framework and ensure that people have to disclose things, we have to, make some baseline level of SEC disclosure and requirement, naturally you're going to have a more credible pool of entrepreneurs, of creators availing themselves of that. There's no question in my mind that from my experience in the past few years, it's tremendous how progressive and how willing to play ball, in lack of a better term, that regulators have been taking the approach toward blockchain and toward token offerings in general. There's no question in my mind that you're going to see more clarity, and it's not going to get any more conservative, meaning right now status quo is that securities laws apply in most cases. And the question is, for both the private markets and regulators, how do we continue to make the current rules and regulations work for the industry and have a dialogue to make things a little bit easier? And most recently, last Monday, the cap on equity crowdfunding in the US went from $1 million to $5 million. It's a very sizable increase. And that was the end result of a few years of conversations. Again, Paul, you touched on earlier that these things take a little bit of time. Regulators take longer to change their positions, but that's their job. They have a very clear role in society. And let's not forget that in the US, securities law came about because of the Great Depression, because of non-compliance leading to massive fraud. And so things are moving in a sensible way. But combining that, what we said earlier is that the narrative that retail investors don't know or are not sophisticated, I think that's clearly changing. And whether it's us or an SEC commissioner, I think everyone is seeing that, and changes are bound to follow.
Yeah, no, I tend to agree. And B, do you think this is something? Some people would say, well, the regulations as they stand aren't fit for purpose. They need to be kind of redesigned from the ground up. Are you in that camp, or do you think that this is an iterative process? And as Ken says, you've got the ear of the regulators. They are keen to, support innovation, but, they've also got to protect a huge economy and a huge, cohort of consumers out there, because, as we have seen, if people can abuse markets or can defraud people, unfortunately there are people that will. So do you think that we just have to be really patient and just the industry needs to work with regulators gradually over time?
My experience has been that regulation tends to change incrementally, right? So I think if you sort of start with the premise that it's all broken and that we need to start from scratch, that doesn't tend to be a very fruitful dialogue. I go back to, you have to look at intentions, right? And I think if you look at the regulators, the role of the SEC is to protect the consumer. So I think they're trying to as best they can, sort of keep up with an industry that is moving really at lightning speed. And, whether intentionally or unintentionally, there are a lot of projects that I think get fairly cutesy with their legal sort of, stipulations, if you will. So they, they'll find out that maybe something is not squarely compliant, and they'll tweak little things to try to kind of circumvent regulation in a meaningful meaningful way. So I think, the regulators are trying to keep up. Again, I go back to, I truly believe that the intention of the regulators is to strike this balance, this dance, right, between consumer protection and inclusion. And maybe, again, we can say that they need to move a little bit to the right or a little bit to the left, but at the end of the day, it's change that has to come incrementally. I don't think that, there are a lot of people who have this dogmatic belief that the system is trying to keep, the common man down. At least my experience hasn't been that. I think it's, again, it's a new field. We have to go back. It's interesting. I was actually looking at a magazine cover that a friend of mine was sending from the 1990s. And people forget this, that the way that securities used to be traded was not only paper, but it used to be announced. It literally used to be announced in ads, right? So this isn't that long ago, right? So it's not like we've the regulators are trying to, again, keep things very, very slow. It's just innovation is moving very quickly. And so I think, again, I go back to, I don't think the SEC is not here to play ball. I do wish, and I say this from firsthand experience, that they were providing maybe more speedy guidance, because I think one of the challenges of being a company in this space is, even if you intend to be compliant, sometimes it's difficult to know, right? It's, you can spend a lot of money on lawyers, and probably 5 different firms will give you 5 different opinions, because maybe the guidance isn't 100% clear. So I think, again, clarity would be welcome. And, I think the entire industry is waiting for that. But again, I think that the intention and the heart of the SEC is in the right place. It just has to kind of go through the motions and provide that clarity in time.
Yeah. And just
point B, if I may add on, one component here is that in countries that are emerging, that don't already have a established securities or otherwise, banking infrastructure, they probably can and should be able to put in place frameworks that perhaps are more in tune with technological development. Places like Vietnam with more than 100 million, population of more than 100 million strong, and the rest of the regulatory framework is very new, very nascent. So out of those places, it's probably more realistic to expect a more expedient approach to a regulatory reform or regulatory catch-up game. But in places like the UK, the US, Australia, naturally things will take a little bit longer to see the laws catching up to technical changes.
Yeah, and I guess those jurisdictions do actually have even more responsibility, because historically, smaller centers, financial centers around the world tend to wait for regulations to be established in those big centers and then borrow it. Which is right, which is probably good for this part of the industry longer term, because ultimately I think we would probably all agree that, until we have global regulatory cohesion on how securities can be traded and transferred across jurisdiction at any time of day, then that is kind of the ultimate aim, I guess, but that is going to take time. But the fact that the UK is, slowed down a bit now, has been pushing forward, but especially I think that it's so positive that the US is sort of taking this lead now, because I think that will have more global implications. Pete, do you, as an investor, a wide number of fintech firms in your portfolio, is that a factor when you're kind of making your investment decisions, where a company's based and which regulators they're going to be up against?
So we, I guess the one of the strengths of Prosus is that we're a very, very global firm, and our DNA is actually decidedly emerging markets, right? So I think we probably view the world slightly differently than maybe some of our peers. We've been in places like India for well over a decade. We've been in China for 2 decades, and in Brazil 15 years. So you look at sort of our footprint, and I would say we probably venture into geographies that others have historically maybe been a little afraid of. So for us, it's less of a consideration. Having said that, in blockchain specifically, we do favor geographies that have slight clarity, and it's a spectrum, right? There's places where I think the governments have been very, very proactive in, specifically giving guidance on cryptocurrencies because they want to become crypto havens, and they're kind of capitalizing in this moment of time. And then there's places where, I think that the regulators, are trying to be thoughtful, but maybe are moving a little bit slower. So, we do like places, again, where we at least have some level of clarity around sort of the laws. But I go back to, again, our DNA as emerging markets. We're not afraid of geographies like maybe some other investors might be. And so we're probably maybe a little bit more, if it's a spectrum, we're a little bit more open to new geographies versus others.
Okay, good to know. Good to know. So, Ken, let's get back to Republic. As I said at the beginning, what I liked about your approach is that you kind of haven't rushed in. You know what needs to be applied to the Republic platform in general, and it seems to me that you've been working out, what can you work with from existing regulations to best effect to start getting this out into the market. It doesn't necessarily have to be the full end-to-end dream and solution that we hope will kind of materialize over the coming years. So can you talk us through that approach? Because I know you launched a token last year. Maybe tell us a little bit more about that. And you've also launched an interesting product, which is a tokenized debt instrument as well. Could you tell us some more about that?
We look at Republic as a player at the forefront of fundraising and of investing. So at any moment in time, aside from looking in a clear way at the values as well as the hindrance of existing fundraising mechanism, we keep a close eye, a close lens on what's next. So back in 2017, after seeing this whole non-regulated ICO boom, the one thing about the ICOs of 2016, 2017 was that they were basically the ultimate outcome of the potential of equity crowdfunding. You have projects around the world raising tens of millions of dollars from people around the world without VCs being involved, but obviously all done in a very non-compliant way. And so we had this question of what if we apply a regulated framework around it to enable this to be done in a compliant manner. And of course, that's going to dampen the ability to market, to provide that broad exposure. But I think that's through all of these consideration and mechanisms that Republic ended up raising publicly using a token offering, and then also raising in different ways from the venture community. I think there's a narrative that somehow if ICOs, if token economy were to succeed, that will undo the value of VC, and there's nothing that's further from the truth. Even though we are, financially robust, the value of having someone like Prosus and be on the board, the connection, the advisory expertise, the consultancy, the whole global network is something that is a very different value than the value of 1 million customers backing you and supporting you. So understanding the value that comes with capital, the very different values that come with different forms of capital, and choose and pick when and how much that is suitable for a business model is a highly individualized cases. But we, as we grow to where we are today, and I'm certain in the future as well, continue to consider not only what is available, but the potential avenue for capital financing that has yet to mature. And if we can, we will continue to push that needle forward, so to speak.
So the security token you actually issued, what does that give people? What does that give holders compared to if they were just holding straight share certificates?
Core to any token economy is the purpose of incentivizing participants to act and participate and engage more. And if they engage more, they gain more. So when we were looking at the time, Republic was 100,000 community members compared to over millions now. The only way that we can meaningfully provide that alignment in interest is that if we share a portion of our future revenue, our future profit with token holders, that means that if they come back to Republic to invest, if they invite friends to become members, if they send a deal, all of these things will go and contribute to the value of the tokens that they hold. Out of that general thesis that we ended up rolling out the very first tokenized revenue sharing model, and that is the Republic Note token. I believe today is still the only one that's available to non-accredited investors. And getting the support of BN Prosus is a tremendous validation because up until now, the marquee institutions, the financial institutions, the Prosus of the world, are still, by and large, watching this industry intently, but in rare cases, formally back a project. And so that we have, got that validation is something that not only is meaningful to Republic, but I think is certainly, and I hope, is a weather bell for the entire blockchain industry, and certainly for the digital security sector.
Yeah, and I think back in 2017, with everyone claiming that VCs would be gone now that we have ICOs, and you're still here, B. You're still here.
Still here. Still have a job. It's good.
Exactly. We're pleased about that, and I don't think you'll be going away for a while. And I guess especially people that have worked on startups and gone through these funding rounds, it's a bit unfair because the level of support that the companies do get from their VC investors is quite incredible sometimes. And I guess, it's easy for people on the outside to say that. Maybe this bringing the two worlds closer together, especially at a pre-IPO stage when normally the VCs are kind of, gone or just not as visible as they once were. Hopefully it will be a good education exercise and paint the industry in a better light if it needs to be, but maybe just some of those perceptions will dissipate somewhat with that sort of being involved in the earlier stage companies while they're still getting support and the backing from the VCs as well. So hopefully that some positives will come out of it, and you will still be around for a while. One of the things, just back to kind of be on your blockchain investments, maybe if you can just talk about how many you've made. I don't know if you can mention the companies that you've invested in. And what it is you're specifically looking for now. There's so many verticals within the blockchain industry that you could be going after. I mean, none of us have enough time in the day or year to keep on top of everything. What's kind of interesting you most at the moment?
Sure. I guess I'll give you a bit of history and context in terms of our participation in blockchain. I'll say that, and you'll have to fact check me on this, but I think we're probably one of the first, if not the first, public company to actually invest in the blockchain space. We really, I would say, started to look fairly early on, actually probably 2013-14 timeframe. First through our PayU division, which is our payments division, and then really sort of organizationally started to get intrigued about sort of the potential of the technology. So why do we care about blockchain? So there's, if you kind of look at sort of the history and the ethos of our company, we are sort of decidedly emerging markets. We're in markets where, typically speaking, payments and banking tends to be broken, heavy remittance markets. These are, again, places where I think the potential for what blockchain tends to offer is very, very large. And so, I think from, a lot of the potential of the technology just speaks to the problems that we care about. So we care about financial inclusion. We care about, again, unbanked populations. We care about, global development. These are, again, things that we think that ultimately the technology, definitely not a panacea in any way, but can be helpful, right? And solving some of the biggest sort of pain points that we've seen in the markets that we're in. So we've made several investments, some announced, some not. But we've invested, between our ventures team and our PayU division, again, our payments division, and about, I want to say 8 or 9 companies. Some are in the exchange space, some are in the wallet space, some are in the NFT space, some are so they're kind of, I would say, fairly distributed in terms of the topics and problems that they tend to address. So I think, again, our interest is fairly broad. In terms of sort of our outlook for blockchain going forward, I'll tell you sort of some of my personal challenges in the context of looking for opportunities. One is obviously, given the context of us as a public company, we care about compliance. And so I think finding teams that really are, at the forefront of compliance and working with the regulators to make sure that, they are, just functioning within a certain framework is something that is very, very important to us. I think probably more so than, maybe the smaller blockchain funds or, you definitely have pockets of money that are very interested in blockchain. But, compliance is first and foremost very, very important to us. Two, I think there's a lot of noise in the space, right? So I think there's, at the end of the day, there is this incredible innovation around tokens, right? So, and the ability to fundraise using tokens. But it also has created this sort of perverse incentive for a lot of teams to actually manage to the price of the token, right? So what do I mean by that? I mean that there's a lot of projects that tend to be very heavy PR, very little substance, right? So I think one of the things that we definitely, I think any investor in the space, retail or institutional, actually runs into is being able to sift through that noise, and also really kind of be a long-term investor versus, a more kind of liquid strategy where again you're sort of waiting for the ups and downs of announcements. So there's a lot of that type of value creation that's happening in the space. Being very long-term investors. I mean, we've been in some of our investments for over 20 years. That isn't really in line with how we think about the world. Again, we believe in fundamental value. We don't believe in, crypto Twitter, pumping a certain token and managing to announcements or a token price. So it's challenging, again, knowing that is a sort of definitely a theme in the space to be able to find opportunities and teams that are very focused on creating fundamental value.
Yeah, and do you think that's something that, I mean, obviously, investing in early stage companies, until recently, maybe getting liquidity might take some time. Anyway, yeah. People are launching tokens and they're available on a DEX the next day now. Do you think that will change the typical strategy of VCs? Going forward in terms of how long they do stay invested, or at least divest more often than they did in the past when they have that option?
I don't know. Like a lot of tokens have lockups, right? So I think there's kind of a minimum hold expectation that's set up from the outset. Yeah. I think a lot of VCs, there's the temptation, right? It's there you can take your entire cost basis off the table, again around certain announcements, and if you're looking at it from a pure sort of risk adjusted basis, it makes sense to offload some of the tokens, right? Mm-hmm. So that strategy, it's definitely not something that I would criticize someone for doing, because it makes sense, just mathematically it makes sense. Mm-hmm. I think again that the challenge is really stepping back and trying to look for pockets of value, 5 to 10 years from now. And that's, I think, probably one of the most difficult things to do in this space. You also see, I think, there'll be a lot of projects. Actually, I think DEXs are great examples of this, that just are fundamentally incredibly innovative. But there is no way that the current version will be the final version, right? So you kind of look at it and you're like, if I apply sort of a regulatory lens, if I try to again look at the global financial system, the version of a Uniswap, SushiSwap, all of these DEXs that you see that exist today are definitely version ones, right? So having a longer term view on some of these sort of trends, I would say it's very challenging. And it's again, going back to our lens is one where we are patient investors. We don't have a liquid strategy. We're not looking to get out in a year or two's time. I think that's definitely something that, I definitely think through every day and don't have a very good answer to.
Okay, well, we'll wait and see. I mean, just on that, on the compliance side, I mean, I agree with you completely on the DeFi in general and DEXs in particular. They will evolve and over time, and again, huge amount of potential, but very, very raw. But I guess one difference I've seen, I mean, if I think back to like 2013, 2014, if you were on Reddit or Bitcoin Talk or something, and you even mentioned something like giving people identity on the blockchain, you'd have been kind of, the ejector seat would have been hit and you'd be through the roof. But even, speaking to some people working on DEXs, they're like, okay, if this is going to open up, there needs to be, it doesn't necessarily, it could be optional, but there needs to be the option of a compliant version, or for people to be able to know the identity of who they're trading with. Which would be nice if it's optional. That's great. If people choose, people will gravitate towards it. I don't think you should exclude people that don't want to use that. And you mentioned that earlier, Ken, around the efficiencies that we can bring here. Obviously, we spoke about regulatory cohesion, but for me, when people have whenever they've asked me, it's like, what's the killer app for blockchain? I've always said identity, because it would just tie so many things together. It will kind of solve so many problems in conversations with regulators. What are you saying? I'm still not seeing a huge amount happening there. I mean, are you seeing anything? Is this something you're looking to develop yourselves, Ken? Is it something that the industry should be focusing more together as a community? What's your take on that?
Paul, do you mean on the identity as in privacy identity, or do you mean more on just the general compliance framework and the identity involved in DEX or DeFi trading activities?
Well, I guess ultimately, especially if we're talking about, especially in a regulated space like security tokens, then being able to identify the participants is going to be critical, and probably will become critical in DeFi markets at some point going forward. So it's really that piece. And people have spoken a lot about self-sovereign identity for some time. And it is a tough nut to crack. And I think, it's critical that this industry kind of cracks it, because if you get regulators coming down and directing what needs to be done, when we're not going to end up with anything new, when I think we probably all agree that, designed correctly, new identity systems that give the person themselves more control over what they're sharing is going to be an interesting thing. And if that plugs into all sorts of networks, it could open up a lot of things.
Absolutely. I think when it comes to DEX and DeFi, there's a substantial component of non-compliance or just ignoring the need to even consider compliance right now, which raises substantial risks for investor. But KYC AML, or Know Your Customer, and anti-money laundering is an area that is still slowly catching up to technology. The existing framework around banking standard for KYC AML is literally knowing you through your ID, your passport, loading an image. But that's not the only way of doing it, right? At the end of the day, they just want to know that this is not a fraudulent transaction, an illegal transaction for improper purposes. So the different ways of verifying that with technology, you can enable KYC AML on chain and sharing validated identity without actually having to prove a passport photo. So there are newer, more efficient ways that are currently in development. I have no doubt that down the road, you're going to see, KYC AML depository system, kind of like a credit score system. And that if you're already in that framework, that different projects and different exchanges can leverage that know-how, that validation without having to prove identity time and time again. But currently that doesn't exist quite yet, and most DeFi, most DEX transactions ignore KYC AML in its entirety. That's something that we are looking very closely in collaboration with some of the ecosystem partners that we have, including Binance and Algorand and Avalanche, and I'm pretty optimistic that later this year you're going to see more clearly compliant framework for DEX and DeFi to continue to thrive. But that compliance component gotta come into the equation sooner or later. And I think those projects that the more you ignore that and the bigger the project is, the higher the risk and the more near-term the risk for those projects. These things you just can't ignore forever. The SEC can wait for 5 years and wait until you're a multi-billion-dollar project and come with a hammer. And are you ready? And are your investors ready and expected to deal with that? I think that's a question that all founders and all investors should have in mind.
Yeah, I guess so. And I mean, I know we're short on time and it's something we can save for another day, but we have got through without really discussing NFTs. But it's, probably seeing some of the kind of mistakes repeated again. And I'm sure the way some of these can be structured in very interesting ways, but then you are going to they are going to start looking like equities in some way as well. And so maybe that's a consideration that some of the kind of early pioneers in that space should at least consider. What that might look like going forward. But again, another interesting one, and we can come back and talk about it because we are short on time. We'll wrap up very quickly. Ken, what's on your immediate roadmap over the next 6 months?
There's no question that secondary solutions for traditional equities as well as digital equities something that we have been thinking about and beginning to work on. And that's still, I think that's a component that's difficult, but truly needed for mainstream adoption of private investing in general and specifically for digital securities in particular. So we hope to be able to introduce a framework and a version for that over the next couple quarters or so.
Exciting stuff. We will keep an eye out for it. And B, what are you going to be researching most? It doesn't even have to be blockchain. So much that you're looking at.
Blockchain. I feel like anyone that's started to look at blockchain goes down the rabbit hole and never looks back. So that's been my journey since 2015. Is just deeper and deeper into the space. So a couple of things. I think at the forefront of my thoughts now, both in DeFi and I think in the NFT space as well, is just liquidity, right? Mm-hmm. These markets, especially in NFTs, I worry a bit about the sort of the long tail, especially. I think if you think about each NFT is a market in and of itself, right? Mm-hmm. So you have to kind of think about I think what you're buying and ultimately how you will come into liquidity, eventually. So I think about that a lot, research that quite a bit, and sort of teams that are looking at that problem specifically is something that I'm very, very interested about. It applies obviously to something that Ken was just mentioning with secondary trading on the security token side, or even equity side. Is just, again, how do you bring liquidity to retail, right? Just, again, most retail investors aren't used to or aren't expecting to hold something for 2 decades, right? So, creating a robust market around that is really interesting. Liquidity when it comes to DeFi, right? So it's, again, this innovation with DEXs, with LP tokens and all the things that you can do with them. I'm fascinated by it. I think it's something that, I didn't fully appreciate just how disruptive it could be, I would say probably until recently. But it's something that I'm also researching in a very massive way. So I would say liquidity as a theme is something that I'm very, very interested in. Yeah. But second, I think this is, any blockchain teams that are innovating in this space, please do contact me, is insurance. So I think it's, I say this mostly as someone who is maybe at this point too personally invested in all things crypto. Insurance products are definitely lacking. And I think both on the retail side and on the institutional side, there's just certain things that, it would be great to be able to insure against, just knowing that, this market tends to be volatile. This market tends to be prone to hacks. And, when you start to talk about real sums of money, insurance products are definitely very welcome. So anyone that's really kind of innovating on the insurance front, it's something I'd be interested to talk about.
Okay, we will try and put you in touch with some people. Thank you for sharing your thoughts, guys. It's been a fascinating conversation. Really appreciate you taking the time to join us today. Hopefully we'll get to speak to you again soon, and just wishing you both every success in these very crazy but very exciting times over the next year or two ahead.
Thank you, Paul. Thank you.
Thank you.